Questions regarding the process of buying a home loan. So first, we want to know, what type of loans do you offer?
We offer residential mortgages, so that includes FHA, VA, conventional, and USDA, and then we also offer what they call non-QM.
Okay, what is an FHA?
FHA is one of the easier mortgages to get um, underwritten, so it's easy on the underwriting, so it gives more flexibility on your file. Let's say you had some lates, or you had a bankruptcy, or you needed a higher debt to income ratio. Is a loan that's backed by the government, basically more than 90% insured by the government.
All right, what about a conventional?
A conventional loan is also another government loan, but it is a little bit harder on the underwriting guidelines. It has a lower debt to income ratio, so usually that is capped at 43%. And the great part about using a conventional loan compared to the other government loans is it is less, it's more easy on the property. So if the property needed some fixing, or it might not meet the other FHA or government guidelines, conventional will usually allow you to close on that loan, on that house.
Awesome. Okay, what about USDA?
USDA is a rural program, so here in the DFW area, the rural, since DFW Metroplex is so big, some of the outlying cities are considered on the USDA map for rural. So when you think of rural, you kind of think of
Out in the country.
out in the country. But in the DFW area, you'll be surprised that it's still, you can still get the city amenities, but a USDA loan is for a rural property. And the great part about that is you don't have to have any down payment to purchase that home. Now, it does have an income limit, but it offers a lot of the same great things of FHA, as far as a higher debt to income ratio also.
All right, and VA loan.
A VA loan is one of the best loans compared to all the other ones. You have to be a veteran, so you would have had to serve in the armed forces, whether that's Army, National Guard, Air Force, Marines, Navy, any one of those U.S. military services. You will, as long as you're honorably discharged and you did at least one term, generally it's the easiest way to say it. But as long as you're honorably discharged, that's the main thing about the whole the whole VA eligibility.
Okay.
You don't have to have any down payments because it's 100% fully financed. You just worry about the closing costs.
All right. And how many banks do you work with?
I work with over 20 different banks. So
That's a lot of banks. Okay. What are the steps when applying for a home loan?
Oh, the steps on applying for a home loan is pretty simple now with us. You can do our online application that is fully automated, so you can go and place in all of your information. It's basic information, your name, date of birth, social, where you worked at, and where you live at. That's the 5 basic things that we need. From there, it will ask for some simple documents that you'll have. Things like your ID, social, your paycheck stubs if you're an employee. If you're self-employed, we'll need your tax returns. And then the last thing we'll just need is your bank statements.
All right. What is the difference between an appraisal and an inspection?
An appraisal is where the bank sends out an independent third party to the transaction that has no financial interest in it to say this home is valued at X dollars. So let's say you are purchasing a home or refinancing your home, and you're saying my home or this home I'm buying, we have agreed to say this home is worth $200,000. They send out a person to come out, look at the home, take pictures of the home, and look at the other surrounding homes that have sold, usually within the last 6 months, and usually within probably from up to a mile from the property. It could be longer, to justify saying this home is $200,000.
All right. And what is the minimum credit score one can have to get approved for a home loan?
Oh, the minimum credit score is 640 right now. Now you can't go as low as 500 credit score. That will be a little bit tougher on the underwriting, but we will help you get through that.
So you can get approved with as low as
500.
500?
Yep, you can have.
But the recommendation is
640 right now. So 640 is the recommended, and that will give you access to 3.5% down and 3% down payment. So,
does it hurt my credit to be pre-approved? Does my credit score lower?
no, it generally doesn't lower your score. So when you get pre-approved, we're going to do a hard inquiry, and that's going to give us the snapshot of your score at that day. And then from there, it does go down by 2 to 3 points on the inquiry, but that generally comes back the very next month if you don't have any other inquiries.
Can I get pre-approved without pulling my credit?
You can't get pre-approved without pulling your credit. It will be what we call a pre-qual, and that just means we're just taking your information and taking what you say verbatim without verifying any information.
How is the down payment amount and closing costs determined?
The down payment amount is determined by the mortgage that you receive or you apply for. It would be, in the case of VA, it would be 0 on the down payment. FHA, you would have 3.5%. It's the minimum. You can always put down more money, but you can't put down less than what the minimum is for that particular mortgage program. The closing cost is pretty simple to understand. It's what both sides agree to and what the work needs to be done to close your transaction. So you would have your title fees, escrows, if you're going to escrow your property taxes, and if it's FHA, whatever fees that goes along with that.
All right, and how is the amount of purchase you are approved for determined?
It's determined by your debt to income ratio, and then we run it through the system to see if what the system will approve. So the first thing is we'll look at your debt to income ratio, and then the second thing we'll run it through our system to get the approval amount.
Awesome, okay. And finally, can you buy a house from your landlord? For example, if I've lived in a house for X amount of years and the landlord is considering that amount paid, could I get a home loan for the remainder owed?
Yes, you can definitely do that. So buying your home from your landlord is definitely possible. We have helped a number of people to do that. And if the landlord does write that into your contract, that all your payments that you have made while you lived in the home is going to go towards the purchase, then you don't have to purchase it at the agreed upon price.